will be attempting the May-June 2023 Principles of Accounts paper to paper. Okay, let's begin. Now, question 1 tells us about a sole trader who owns a printing firm. He has been recording his accounting information manually. Now, he intends to hire a bookkeeper to assist him with his software program. Question 1, A1. Identify one accounting software program that he can use to improve his business. Well, you guys learned that accounting software program that is very popular is known as your Peachtree Accountant. There you go, guys. Good. Now, part 2. Identify one skill that a bookkeeper should possess. Well, a bookkeeper should possess skills such as using the accounting software. So, IT skills, which involves use of spreadsheets and the accounting software program. Part B. The following table shows transactions that were omitted from the books, and these are the transactions right here. Now, what is being asked of us is that we need to now use the following general journal to record the transactions from the table on page 4. Narration is not required. Alright guys, let's do this. Now, the first transaction here bought goods and credit costing $400 from R through. Basically, we need to enter this on the system. So, the correct response for this will be to debit purchases, credit R through. You can use your GL, General Ledger, for your purchases account, and R through, since this is a supplier, it will be PL01. Debit 400, credit 400. Great job. Second transaction, April 8th. Sold goods valued $600 on credit to UMoon. Two accounts here will be sales on UMoon. Let's have a look to see what our response should be. 8th April, we will debit UMoon, credit sales. UMoon is a customer of ours, so it will be SL01. Sales will record in your general ledger, GL02. 600 is the amount. Now moving on to the 12th of April. UMoon returned $50 worth of goods. Again, this is returned inwards from a customer. So the correct general journal should be debit return inwards, credit UMoon in the amount of $50. Now again, return inwards will be going to our general ledger, hence GL03. UMoon is our supplier, well, is our customer in fact, so SL01. Going to move on to the very next transaction on April 18th. Received an invoice from BVic for goods worth $4,000 less a trade discount. This is a purchase because we are receiving an invoice from BVic, so we'll debit our purchases and credit BVic. Now in terms of the amount, $4,000 less your trade discount, and that will be a value of 2667. So debit purchases, credit BVic. Again, purchases is in our general ledger, GL01. BVic is our supplier, hence PL02. And finally, the very last transaction here, goods returned to Elson. These goods have been invoiced at $120 less a trade discount of 20%. These are goods being returned by us, therefore this is returned outwards, and therefore this is our supplier that we are returning goods to. So the proper entry should be debit Elson and credit return outwards. Again, supplier, therefore Elson is PL03, and return outwards will show up in our general ledger, hence GL04. And again, the amount less the discount works up to be $96. There you go, guys. Great, so let's move on to B2. Identify the source document that was issued for the transaction April 19, 2022. So April 19, 2022 is simply when we return goods to our supplier, and when we are returning goods to our supplier, the source document that we will use will be our debit note. Hey guys, let's move on to letter C. Now, part C is basically asking about a bit of payroll. So let's have a look. The following information is available for 3 of the employees of Yahim Printing Services. First employee, Leela. Leela's annual salary was agreed at $84,000. Yahim has agreed to give her 2% pay raise for a new financial year. calculate her monthly gross earnings for the new financial year. Notice, guys, the word monthly is being highlighted in bold. So let's go. 84,000 was her previous salary. This year she's getting a 2% increase. 84,000 by 2% gonna give her 1680. So her new salary will be 84,000 plus the 1680 to give 85,680. Now remember, they asked for monthly gross earnings. So monthly earnings is simply the 85,680 divided by 12 because remember this 85,680 would have been a yearly earnings. So monthly simply divide by 12 to give you 7140. Now Samson's paid $30 per hour. Yamin has contracted him to work 35 hours per week. For the week ended 30th April 2023, he worked 49 hours. Overtime is paid at time and a quarter. Calculate his gross wage for the week. Basic wage is 35 hours by $30 per hour. That's going to be $10.50. Overtime, he worked 49 hours and the basic working week was 35 hours. The work out is overtime. It's just work out the number of hours that he worked extra. 49 minus 35 will be those hours. Then multiplied by a rate of $2, multiplied by a 1.25, which represents overtime at time and a quarter. Overtime there works out to be $5.25. So his total gross wage will be his basic wage plus overtime, which will include $10.50 plus 525 to give us $15.75. Next, we move on to the third employee, which is Dolly. Let's have a look. Dolly earns a basic salary of $3,400 per month. In addition, she's paid a commission of 2% of the amount for which the revenue of the business exceeds $40,000 per month. For the month of April 2023, the company's revenue was $58,000. So she'll be getting a commission of 2% on any amount above $40,000. Let's go, guys. Her basic pay is $3,400, as we all know. Commission earned is $58,000, subtract $40,000, multiplied by 2%, which is going to give us $360. So total pay will be $3,400 plus the $360 to give $3,760. There we go. Now finally, to close up this question, state two types of compulsory deductions are normally deducted from employees' gross pay. And we all know compulsory deductions include income tax and national insurance. There we go, guys. All right, that brings us to the end of question 1. Time for us to move on to question 2. Now, Nyluk is a computer consultant. She is provided with the following information about her cash book. So here we have a cash book, guys. Let's check this cash book out. Just flip it around here. Let's have a look at the cash book. So they actually gave us a cash book to work with, opening balances, debit entries, meaning money coming in, opening balances on the credit side for your bank account, and entries on the credit side of your credit side of the cash book, which means money being spent. So let's see what questions are being asked on this now. So the first question was asked was, what was the balance brought down in the cash column? Well, balance brought down in the cash column was a debit balance, and this represents money that is in the business, guys. Money that the business has to use to carry out the daily transactions. So money in the business's cash account. But there's a balance brought down on your bank column, as you guys have seen. The balance brought down was on the credit side of the account. Therefore, this means overdraft. Now, B1, state whether Nyla Consultancy Services allowed or received a discount on 15th of April. Well, guys, let's go check it back out. Scrolling back up, 15th of April, O. Morris, 1500. Well, this will be discount received. Yeah, guys, that will be our discount received. Good. Now state two reasons why the check from ADF PLC may have been dishonored on April 9th. Let's see what's going on there. So dishonored check, let's go back up. Right, this is just on a check that we are talking about. This check was a check that a customer would have given to us. We would have recorded up any money inside, money coming in, but the bank told us that that did not come true, so we had to reverse it. Why would that check be dishonored? That check could be dishonored because if there was an incorrect entry on the check, say wrong date or even wrong signature, or even if the person who was actually making the payment to us did not have enough funds in the account to make that payment. Those are the main reasons for having a dishonored or a bounced check. Good. Now, part 3, guys. State the reason for the two entries on April 20th, 2023. Let's have a look. Let's see what's going on. April 28th, we have a bank here. Money coming out of the cash, going into the bank, and then money actually going into the bank coming from cash. That's what the 28 means. Now, you guys know whenever you see entries like this is referred to as a contra entry. And that was the suggested answer that we would have used. If there is contra entry. Good. Time for us to move on some more. Next up, part C. Calculate the percentage discount on 12th April 2023. All right, guys, let's go back up. Let's check it out. So, a percentage discount on April 12th, I believe it was. Let's check it back. Or April 12th. So the discount was on April 12th, guys. April 12th is here. So we got $5,000 off. We did, in fact, well, actually, we gave 5,000 off the book Center Limited. They did pay us 245. So in total, they were owing us $250,000, and we gave them a $5,000 off. So let's work on that percentage, guys. 5,000 out of the 250 which they owed us. That meant we gave them a 2% discount. Simple, just like that, guys. Now, state the reason why Nyla Consultancy Services had to refund Lima on 29 April. So we had to refund a customer on 29 April, and we simply would have refunded that customer because we may have overcharged them. Nyla may have overcharged that customer. Let's have a look and see. Alright, so here we did receive money from Lima. Good. And then we ended up giving them back a refund. So most likely we overcharged them. Alright, guys, there we go. Next up, calculate the yearly interest that Nyla Consultancy Services would have to pay for the bank loan on 10th of April. Alright, so going back up. Check it out. So yearly interest in the bank loan is 60,000. The yearly interest is 12%. So simply 12% by 60,000, and that should give us our value. Let's go back, check out our answer. There we go, 60,000 by 12% to give us 7,200. Nice. Now finally, calculate the balances in the cash book for May 1st, 2023. So we had to work with the balances at May 1st, 2023. State whether the balance brought down in the cash column, what will it be? What is debit or credit? Was the balance brought down in your bank column? What is debit or credit? Right, guys, let's have a look at that. Well, in a situation like that, the balance of the accounts, you simply add up both sides, guys, right? So add up both sides, and let's see what it's going to work up to be. All right, let's balance of the account. So first of all, let's have a look at the bank column. 20,000, add 60, add 245, add the other amount of 14,005. That should give us a value of, let's put it in. Right, this total should have been worked up to be 339. I'm going to write it outside here. 339 500. If you add up this side here, they would have not come up to that total. They would have come up to considerably less. Now, this side must be 339,500 as well. To get this to balance, the balance carried on value would have been 287,850. And again, this was your balance carried on. 30th April. Now, how about your cash column, guys? Let's see what's going on here. 16,000 plus 450 would have been 16,450. On this side here would have been considerably less as well. So to make it balance, to come back up, this balance and carried on figure should have been 1950. Good. Remember the question asked us, what will the opening balance be on May 1st? Right, so let's put on May 1st here, guys. So May 1st, your balance brought down value should have been, remember we would have closed off these accounts here. Right, balance brought down should have been 1950 and 287,850 respectively. Right, so therefore its debit balances, cash balance should be 1950 and the bank account balance should be 287,850. Let's go write that in. So right here, guys, 1950 debit and 287,850 debit. So there we go. Got through pretty well with that question also. Right, so part D. Complete the following accounts in the book of Nyla Consultancy Services for the month using the information in the cash book on page 8. Close each account at the end of the month. Right, so if you guys go back and have a look back at Kalima in the cash book on page 8, so you know it's a bit of scrolling and looking back up and stuff all the time. So you have to go back up again. Kalima did in fact receive a discount of $250 when they paid us $20,000 by a check. So we have the entries in our cash book here, so we no need to go to Lima's account and complete the double entry there. Also remember, Lima got a refund from us of $1,600. So guys, let's get it done. The 4th of April. Bank, 20,000. This was how much she paid us. We would have debited the cash book and now credit Lima. Also on the same day, there's a discount allowed as well. $250. Great. And then remember, on the 29th of April, she got a refund. So guys, what we need to do now is just balance up the account and we should be finished. Right, there we go. In the end, the total should have been 57,600 there, 57,600 here. Great job, got through that. All right, nicely done. So May 1st, it's brought down to the 7350. All right, great job. All right, next we're moving on. Let's see, we need to get done. We need to get a discount allowed. Um, account completed. All right, so guys, on this day, we gave on the 4th of April, we gave Kalima a discount. The discount was 250. And also, if you go way back up, did we give anybody else a discount, guys? I think we did. Have a look back at the question. We gave Booker Center discount as well of $5,000. Remember, this is in fact a discount allowed. Right, so I'm going to just balance it off. Great. Total at the bottom. All right. Good. Job, guys. So this would have been your answer for this question. So we got you pretty well, but those different accounts. Nicely done, guys. Okay, so time first to move on. So moving on to question 3. Now, question 3 is in fact a manufacturing account question where you would have had lots of data to work with. And basically, after reading through the data, you'd have noticed opening stock of materials, raw materials, work in progress, finished goods. We would have had some additional data happening during the course of the year, sales revenue, purchases of raw materials, factory wages, and so on. Notice carefully, rates and insurance would have been a portion, general expenses a portion as well, and then you had closing balances down at the bottom for your raw materials. What is being asked of us? Well, using the information from page above, identify 2 examples of direct costs used in the manufacturing of your product. Right, guys, let's check it out. So, direct cost would include direct labor and royalty expense. We're seeing that right here, guys. Royalties and your direct materials. We saw that right there. Check them out. Good. So those would have been your answers for that first point. Secondly, identify 3 examples of indirect costs used in the manufacture of your product. Indirect costs includes overheads, general expenses, rates and insurance, right? And even part of the factory wages would have been considered indirect. So there we go. Nice. Good job. Moving on to the next part now. Now, using the form on page 15, prepare the manufacturing account for Chevron Manufacturing Company, showing cost of raw materials consumed, prime cost, manufacturing overheads, and the cost of production. That was worth 12 marks. So guys, let's jump into it one time. Let's see how this worked out for us. Now guys, we had the table already laid out for us with the name and heading, raw materials, opening stock 23,000. Next up, purchase of raw materials 306,000, and well, we had to add the carriage and what's onto that. Now, purchase of raw materials, together with the carriage inwards, total up 308,000. That was our gross purchases. Gross purchases plus the amount of opening stock we had from before gave us a total of 331,000, which is the cost of our materials available to use. Now, we did have closing stock. Closing stock is materials that we did not use, which would have been 33,000. So, materials available for use, 331, subtract the closing stock of 33, going to give us the costs of materials used, which would have been 298,000. Now, from here on, you need to add in our direct labor. If you all go back up to the question, you said direct labor accounted for 60% of factory wages. So factory wages was 60%. So 60% by 123 would have been our direct labor, and the rest would have been indirect. Remember that, guys, right? Let's scroll down, let's see. 60% by 123 going to give us 73,800. There we go for your direct labor. And well, remember, we did also have direct expense or royalty of 17,000. Adding up all those values together, direct material, direct labor, direct expense will give us prime cost of 388,800. Next up, we need to add our factory overheads onto that. Factory wages, remember, were indirect. 40% were indirect. So 40% by 123,000 to give us 49,200. Rates and insurance, guys. Let's have a look back at rates and insurance. Rates and insurance, 4-to-1 between factory and the office. That means 4/5 went to the factory, 1/5 went to the office. And right away, general expense also apportioned to the 500 to the office, remaining to the factory. General expense was 14,000, so you'll work on that in the manufacturing account down below as well. Let's check it out. Alright guys, so factory wages, 40%, rates and insurance 4/5, and general factory expense was 10,005. Those will be our factory overheads. Add them all up together, total factory overheads 95,700. 95,700 add on to our prime cost going to give us a value of 484,500. Next, we add the opening work in progress, then subtract your closing work in progress to get your cost of production of 469,500, and this would have been your manufacturing account that you would have had to prepare, and this was worth, I think it was 12 marks. Yes, it was 12 marks, guys. Looking good. All right, nicely done, guys. So next up, you had to work out your net sales figure. Let's work out that net sales figure. Now this isn't difficult. Net sales will simply be your sales revenue. Let's put that down here. Subtract your sales returns. Sales revenue was 658,500. Sales returns was 1,600. Subtract them up, you should get 656,900. Right, and that was your answer right there, guys. Check it out. Sales revenue 658,500. So that's sales returns 1,600. I will give you a net sales. Just highlighting those values for you guys to check them out. Turn inwards. There we go. Right, not bad. Right, so moving down. Now, Chevron, the owner, paid $2,300 for insurance. This amount covered $1,200 insurance premium for his business and $1,100 insurance premium on their family's home. The accountant credited the bank with $2,300, debited insurance expense, and debited the drawings account. So even though they paid this insurance for their family's home, the accountant did the right thing and debited drawings. The accounting principle applied here would have been separate entity concept. And moving on, the accountant did not make any entries in the records of orders received for goods to be supplied in the next financial year. So he kept revenue for this year in this year. He didn't include revenue from next year into this year. What he did there was to apply the matching concept. Great. And this brought us to the end of this question as well. So time for us to now move on to question 4. Now question 4 basically asking us for a production budget, guys. Let's have a look. Yeah. Brooklyn Sal is one of two businesses. Brooks Technologies manufacture components and production of monitors. Forecast sales for the quarter for each quarter of 2023 would have been follows. This is your forecasted sales. Coming down below, their policy is to maintain a closing stock sufficient to cover 25% of the next quarter sales. Opening stock will be 1,500 units. Prepare production budget for each of the first 2 quarters of 2023 for the components. Alright guys, we'll be able to handle that. Let's check that out now. So let's record our entries here. So first of all, we know exactly the format to look up our production budget. Let's start up with sales. Less opening stock. Right? Then we're gonna add closing stock onto that. And then that should give us our production units. Good. All we need to do now is just go get some values, put it in, and we should be done. So sales in quarter 1, 6,000. Opening stock would have been 1,500. Closing stock would have been 2,000. Remember, closing stock had to be sufficient to cover 25% of the next quarter sales. Next quarter sales would have been 8,000. 25% is 2,000. So that's why we put our 2,000 down here. So production units worked out to be 6,500. Now closing stock in 1 month will be the opening stock in next month. So there should be 2,000 here. Forecasted sales would have been 8,000. Closing stock 25% in next quarter. Next quarter is 12,000. 25% of that would be 3,000. And our production is worked up to be a value of 9,000. Right, so we got through pretty well with our production budget thus far with 6 marks. Right, good guys. Right, time for us to move on to part 2. Selling price of one component is $65. Cost of producing one component is $50. Calculate your markup. Well, 15 is our mark. 15 is your markup is your profit. That's so. So selling price is 65. Let's do it again. 65. Cost price is 50. And your profit is $15. So $15 is your profit. Now to work this up in terms of markup, markup is profit expressed as a percentage of cost. Simply take 15 divided by 50, multiply by 100, and our markup worked up to be 30%. Alright, great job guys. Next, time for us to move on to the next point. The next part of the question, which is coming down now. Let's have a look at this one here, guys. So we did have some errors in the books. Balance of office furniture recorded in a ledger as 12,364 when it was supposed to be 12,436. Item of expenditure had been recorded as revenue expenditure. Item of capital expenditure had been overstated in the books. What do we do here, guys? Well, let's check it out. For A, the balance of the office furniture was recorded in ledger as 12,364. Therefore, a non-current asset would have been understated. And the profit for the year would have been understated as well. This was for B. Item of capital expenditure had been recorded as a revenue expenditure, right? So the capital expenditure requires revenue expenditure, non-current asset understated, and the profit for the year understated. Now C, item of capital expenditure had been overstated in the books. Now our non-current assets would have been overstated, really, yeah, because it said an item of capital expenditure had been overstated in the books. Complete the table, put in the ticks and correct columns, indicate the effect of the errors. So this would have been overstated, yeah, because our non-current assets would have been too much. Right, because they're overstated. And well, effect on profit, well, this is a capital expenditure. It does not affect your profit, so therefore no effect. Good job. Alright guys, moving on to number 2 now. Identify two payments that Brooklyn can be used to pay suppliers of Brooks Technology for tools purchased on credit. Two payment methods. Well, they can make payments via checks as well as direct deposits. Great. Nice. So moving on from there now. Part C, guys. Brooklyn maintains a full set of books. A purchase ledger control account and sales ledger control account are prepared at the end of every month. State two uses of control accounts in the accounting process. Well, control accounts normally used to locate errors. Good. And also determine the value of debtors and creditors quickly. Great. Falling balances were extracted from books of Brookie Computer Supplies Limited. Record the following balances as they would appear in the sales ledger receivables control account. Refunds of trade receivables will normally be a debit entry. So there we go. Contra items will normally be a credit entry, 550. Bad debts, normally a credit entry as well, and interest charge over the account, debit entry. So we have all your answers right here, guys. There we go, check them out. Now going down some further, that should be it for this question 4. So we got through pretty well there. Time for us to move on to question 5, guys. So let's have a look at question 5. Now, question 5 is a bit of, let's see, a cooperative. So let's see what's happening here with this cooperative question. So after reading through your details, trial balance given, you have a bunch of information and data to use. So that's not bad at all. Looks pretty good. Next step first is to have a look at some adjustments. The following adjustments have not yet been taken into consideration when arriving at a surplus for the year. We had to now put together, for part A, a statement of corrected surplus. So guys, let's put together a statement of corrected surplus. So let's see how this goes down. Surplus for the year would have been a value of 75,900 split in. We did have some notes, guys. Note A, building insurance expense had not been adjusted for a prepayment of 500. So when we initially calculated that surplus, we did not take into consideration a prepayment. Prepayment means part of the expense that we recorded would have been for next year and not supposed to be included in this year. So if that prepayment was not supposed to be included as part of the expense, but it was, it meant that our surplus would have been not correct. So therefore, to fix that, we need to add the prepayment back on to the surplus, guys. And that was 500. The other adjustment we had would have been for part B. We had some depreciation. We had to record depreciation. Motor vehicles were not depreciated the current year. The policy is to use reducing balance method at a rate of 25% per annum. Alright guys, so we all know how to get this thing done. So let's check it out. Reducing balance method is simply to take the cost, subtract your existing depreciation, and then multiply by the rate of 25%, which we're going to do here now. And that should have given us a value of 30,000. Great. So what will now be our corrected undistributed surplus? Let's put together our values. And it should now be 46,400. Right, so check it out guys, it was just with 4 marks, so 1 mark for each one. So that was pretty well done. Good. Alright guys, so let's see what next is being asked of us in this part B. Now part B was another very small appropriation account, in this case just with 3 marks. Using the following form, prepare a statement showing the appropriation of undistributed surplus for the year. Board of Directors decided to transfer 12,000 to Education Statutory Reserve. Alright guys, let's put in some values here. So first up, you start up with the corrected surplus for the year. Let's throw that in. That was 46,400. Remember, we just worked that out from before. Then remember, you normally add on your undistributed surplus brought forward from before. Let's put that in as well. Here we go. 33,400. Total there was 79,800. Now we had some appropriations. Transfer to the Education Reserve Fund. They told us $12,000. Gonna go to the Education Reserve Fund. Good. Looks right up there as well. Education Statutory Reserve Fund. Let's transfer that out. Now guys, once you transfer this out, remember this is now be subtracted. We should now get an undistributed surplus carried forward in the amount of $67,800. Great, and this was our 3 marks for our appropriation account. So make sure you guys understand that. Check it out. It wasn't really too bad. It was just with 3 marks, but it was some simple calculations to get your 3 marks. So good job there, guys. Looking really good. Now the final part of this question, part C here, the final part, guys, was for 13 marks. You had to put together your statement of financial position for this business. So guys, let's see if we could get this one done together. So based on the data that we have, we're going to put together our statement of financial position. So first of all, fixed assets will include, or non-current assets as we normally say, buildings, 220,000 at cost. There wasn't any depreciation of your building, so net book value would have been 220. Next up, guys, other fixed asset that we have would have been our investments, as well as motor vehicle. Well, we're going to put motor vehicle next, based on the value. Depreciation of motor vehicle would have been a value of, remember, existing depreciation plus this new year's depreciation together, 50,000. Finally, our long-term investments here as well, 83,004. No depreciation on those. So let's add up. Let's tally up our total non-current assets. Value would have been 393,400. Again, this is our non-current assets. All right, good job. All right, guys, how are the current assets coming up next? Let's put it in. Short-term loans to members. Membership fees due. Prepaid expenses as well. Good. And finally, you have your bank. Bank would have been $40,400. Great. Total current assets included value of 375,800. Next up, you're going to have your current liabilities. Current liabilities will include amounts that you owe. Well, amounts to be owed would have been, put down those values, accruals, as well as members' deposits. Alright, so total current liabilities would have been a value of 24,400. Alright guys, so current assets minus current liabilities is going to give us net working capital. Let's put it in. Add up those values together. Our total net assets 726,800. There we go. Alright, moving on from there, we need to complete the finance by section of your statement of financial position. Finance by your share capital. Add your undistributed surplus, guys. Your surplus will be surplus. They worked out from the appropriation account. 67,800. Good. That's this one here. Good. See it down there. Nice. And then remember, there was the Education Starter Reserve Fund that we had to work with. Reserve Fund is now a value of 102,000. And there we go. Add up those values. You should now get your total as being 726,800. There you go, guys. Alright, so this was how it went down. Check it out. See if you guys follow that in terms of your statement of financial position. So there we go. Alright, nicely done, guys. Great job with that. That now finally brings us to the end of this examination, June 2023. Hope this was very insightful for you guys, and keep on subscribing, liking, and commenting on our videos, because very soon we'll be releasing some more videos for you guys. Be safe. See you guys again very soon.